You're about to sign on the dotted line for your shiny new car. But wait, what if I told you that one tiny mistake in your loan paperwork could cost you thousands of dollars? And what if I also told you that almost everyone makes at least one of these mistakes when buying their first new car? Stick with me, because by the end of this video, you'll know exactly what to avoid so you can drive away with confidence and a lot more money in your pocket. Number 1. Falling for the monthly payment trap. Here's the oldest trick in the car dealer's book. They'll ask, "What monthly payment are you looking for?" Sounds harmless, right? But this is how many buyers end up overpaying. Focusing only on the monthly payment lets them stretch your loan out for 72 or even 84 months, making the payment seem smaller but costing you way more in interest over time. For example, if you buy a $30,000 car at 6% interest for 60 months, you'll pay about $35,000 total. But stretch that to 84 months and you'll pay almost $38,000. That's almost $3,000 more, just because of the longer term. So always negotiate the car price first, not the monthly payment. Number 2. Ignoring your credit score. Your credit score is like your financial reputation. It decides what interest rate you'll get. And here's the thing. Even a small difference in score can save you thousands. Let's say you have a score of 650 and get a 9% interest rate. If you'd improved your score to just 720, you could have gotten closer to 4%. On a $30,000 loan, that's about $4,000 saved over 5 years. Before walking into the dealership, pull your free credit report and fix any errors. Pay down some balances if you can. Even waiting a month or two to improve your score could be worth it. Number 3. Skipping the pre-approval. Many beginners think, "I'll just let the dealer find me a loan." Big mistake. Dealerships often mark up the interest rate because they get a cut of the profit. Instead, get pre-approved at a bank or credit union before you shop. This gives you the power to negotiate and stops the dealer from playing games with your financing. For example, one viewer told me she was offered a 7% rate at the dealership, but her credit union had already approved her for 4%. That little piece of paper saved her about $2,500. Number 4. Rolling over negative equity. This one is sneaky, and it happens more than you'd think. If you still owe money on your old car, the dealer might say, "No problem, we'll just roll that into your new loan." Sounds easy, right? Wrong. Now you're paying interest on both the new car and what's left of the old loan. That's called being upside down, and it can trap you for years. One example. A guy traded in his car with $5,000 still owed, and his new loan ended up being more than the car was worth the moment he drove it off the lot. If you still owe money on your old car, it's usually smarter to pay it off first or at least sell it yourself. Number 5. Forgetting to shop around. Car loans are just like any other product. Rates vary. You don't have to accept the first offer you hear. Call a few banks, credit unions, even online lenders. For example, Bank A might offer 6%, but Bank B could offer 4.5% for the same loan. On a $30,000 loan, that's about $1,500 saved over 5 years. Spending an hour to shop around is worth it. Wouldn't you spend an hour to save $1,500? Number 6. Not knowing your budget. New cars are exciting, but excitement can make people spend more than they planned. Before you ever set foot in a dealership, know what you can afford and stick to it. A good rule of thumb is that your car payment should not be more than 15% of your monthly take-home pay. So if you bring home $3,000 a month, keep your payment under $450. One couple I coached stuck to their budget even when the salesman tried to upsell them, and they thanked me later because they avoided a 7-year loan. Number 7. Skipping the down payment. It's tempting to put nothing down and just finance it all, but this is another trap. When you make a down payment, you borrow less, pay less interest, and protect yourself from being upside down. For example, putting down even $3,000 on a $30,000 car lowers your loan to $27,000, and you save about $500 in interest over 5 years. Aim for at least 10% if you can. Number 8. Saying yes to extras without thinking. Once you've agreed to a price, the finance manager will offer you all kinds of extras: extended warranties, paint protection, gap insurance. Some of these might make sense, but many are overpriced. For example, gap insurance is sometimes double the cost at the dealer compared to your regular car insurance company. Take a moment and ask yourself if you really need it. One buyer told me she said yes to everything and her loan went up by $2,500, all for services she never used. Number 9. Forgetting about total loan cost. Most people only think about the monthly payment, but what really matters is the total amount you'll pay back. Take two loans for the same car. One is 48 months at $400 a month. The other is 72 months at $300 a month. The 72-month loan sounds cheaper, but when you do the math, you pay about $2,000 more in interest. Always calculate the full loan cost before signing. Number 10. Not reading the fine print. You're tired. You just want to drive away in your new car. But this is the moment when many people sign without reading. Check for hidden fees, prepayment penalties, and incorrect numbers. I've seen contracts where the interest rate was higher than agreed, or the loan term was 84 months instead of 60. Take your time. It's your money. Number 11. Believing you have no choice. Many beginners feel pressured, like they have to take whatever deal is on the table. But you always have options. You can walk away, sleep on it, or shop elsewhere. I once helped a young man walk away from a bad deal, and the next day, he found the same car at a different dealer for $2,000 less. Don't let anyone rush you. Number 12. Overlooking the impact of insurance. Here's something few people think about. Your car loan is just one piece of the puzzle. The car you choose can dramatically affect your monthly insurance premium. That fancy sports sedan might seem affordable at $450 a month until you discover your insurance jumps another $200. One viewer told me her insurance on a mid-sized SUV was only $85 more per month than her old car, but when she considered a luxury coupe, the quote came back at $300 more. Before you finalize the deal, get a quick insurance quote on the car's VIN number. This simple step can save you from a big shock later. Number 13. Not checking the out-the-door price. Dealers love to throw out numbers like just $25,000, but then come the hidden fees, documentation fees, dealer add-ons, taxes, and more. Your $25,000 car magically becomes $28,000 before you even blink. Always ask for the out-the-door price. That means everything included, with no surprises. One couple I helped avoided paying an unnecessary $800 appearance package just because they asked for clarity. Never assume the sticker price is the final price. Number 14. Being dazzled by incentives. Car companies love dangling shiny incentives. 0% for 72 months, or cash back today. But here's the catch. You often can't get both. Sometimes taking the cash rebate means you don't qualify for the super low financing. For example, you might choose $2,000 cash back, but pay 6% interest versus no rebate and 2% financing. In some cases, the lower rate actually saves you more money overall. Ask the dealer to show you both options side by side. Run the numbers. Don't just take their word for it. Number 15. Forgetting to factor in maintenance and depreciation. The loan is only one cost of owning a car, higher end. Vehicles often come with pricier maintenance and faster depreciation. For example, buying a luxury car for $50,000 might feel great today, but after 5 years it could be worth less than $25,000 while you're still paying it off. Meanwhile, a modest sedan might retain more value and cost less to maintain. Think about the total cost of ownership, not just the loan. It's like buying a pet. You're committing to more than just the purchase price. Number 16. Letting emotions drive your decision. This one's tough, because who doesn't get excited walking into a showroom? That new car smell, the shiny paint, the salesperson handing you the keys for a test drive. It's easy to get caught up and say yes just because it feels good in the moment. But remember, that feeling fades faster than the monthly payments. One young man told me he impulse bought a car he couldn't afford just because he loved the color. 3 months later, he was struggling to make payments and regretted it. Take a breath, sleep on it if you have to, and make a decision with your head, not just your heart. Number 17. Assuming bigger is always better. You might be tempted to stretch your budget for a bigger, more powerful vehicle. But here's the truth. Most of us don't actually need a giant SUV or truck, and those vehicles often come with higher payments, insurance, fuel costs, and maintenance. One family I worked with downsized from a big pickup truck to a compact SUV and saved over $150 a month. plus better gas mileage. Think carefully about what you really need versus what you want. Number 18. Forgetting about early payoff options. Even if you agree to a long-term loan, you can still pay it off early. If the loan doesn't include prepayment penalties, many people think they're stuck making payments for 6 or 7 years, but adding just $50 or $100 a month toward principal can shave a year or more off your loan. For example, one buyer sent in an extra $100 each month on her 60-month loan and paid it off in just 48 months, saving hundreds in interest. Ask before signing if there are any fees for paying early, and if not, take advantage. Number 19. Not knowing when to walk away. Sometimes the best deal is no deal at all. If you're feeling pressured, confused, or just unsure, leave. You can always come back later or shop somewhere else. One woman told me she walked away from a pushy salesperson and found the exact same car at another dealership 2 weeks later for $1,200 less and with a better loan offer. Walking away is your ultimate power move. Don't forget you have it. And here's something I'll leave you with. Buying a car is one of the biggest purchases you'll make, and the decisions you make in that moment can affect your finances for years. So now that you know what mistakes to avoid, which one surprised you the most? Have you or someone you know ever fallen into one of these traps? Or maybe you've got a clever car buying tip of your own to share. Drop your thoughts in the comments. I'd love to hear your story.